What's up everyone, it's Scotty with MoneyVest, and in this video we are going to be talking about Snowflake, ticker symbol SNOW. I will be doing a complete fundamental and technical analysis on this stock, and of course go over, whether it's a buying opportunity, what's the overview with Snowflake, and what my personal thoughts are on this company and what I'm planning to do. As you know, Warren Buffett did invest in Snowflake. It was his investment, and we are going to analyze that part, the free cash flows and the earnings and the intrinsic value as well in this video. So hope you guys enjoy it, find it helpful. Make sure that you drop a like. All I ask from you guys is that you subscribe to the channel if you haven't already, drop a like, and share this video family and friends, people who might be interested in learning more about this company, Snowflake. So without further ado, and I do want to point out that links are going to be down below for our Discord and for our Patreon if you're interested in joining. There's about 6 more days left for that 16% annual discount, so you can access all the binds alerts, options alerts, trade ideas, and starting October, I will also be sharing research reports with all of our members on the stock analysis that we are doing for all these companies. So there's going to be a 3-page report shared with all the members that you can download from our Patreon and simply kind of analyze it, and of course get my research reports and analysis on these companies. So first things first, data is the future. Okay, Snowflake is a data platform, a cloud server, right, where you can basically store data, and it's a consumption-based data provider where, it's not a SaaS model, but basically you are paying Snowflake based on your consumption needs, right? How much you're using is how much you're paying for that data storage needs, and of course the analysis part of it to Snowflake. Now, data, as I mentioned, is the future. Okay, the most successful future companies are going to be companies that have the data, can analyze the data, and execute on that analyzed data, right? Data, however you say it, but that's the whole idea behind, just having data, right? Tesla, why would Tesla be so successful, in my opinion, over the next 10 years? Because they have collected hundreds of millions, if not billions of data, which is driven miles, right? And they can analyze that data to make it more efficient and, of course, work on autonomous driving. Why are companies like Meta and Google and Amazon and Apple, like all these companies, are so successful? Because they already have so much data with them, they can analyze it and they can move more efficiently, work on projects that they believe are going to add more value to their customers, and at the same time add more revenues and bottom line to their financial statements. And every single day, right, we're creating more data. We're just basically, by existing and by being so connected with the digital technology, we are creating more and more data. Take a sip of water every time I say data, but that's the bottom line, right? This is the future. This is going to be very, very important for most companies moving forward. Now, Snowflake has a unique product. So in short, it is a data platform built for the cloud. And from the start, Snowflake made a huge decision to separate storage and computing. So Snowflake is not a SaaS business model. As I mentioned earlier, it's a consumption-based business model. Customers buy credits and can utilize those credits to perform queries on their data. Obviously, as consumption grows, Snowflake's revenue grows accordingly as well. Now, the estimated total addressable market for the company is roughly expected to be around $90 billion, okay? That's a pretty big market. And by 2040, there are estimates that, with autonomous driving and genome sequencing in biotech will require surreal amount of processing power and storage that are very hard to estimate. So by 2040, it's also expected, or it's possible, that the market opportunity grows to over $300 billion. So one of the things that we look for when we are investing in a company or when we are analyzing a particular stock is the TAM, right? Total addressable market. Because the bigger the TAM, the bigger the opportunity for the company to grow. If you are analyzing a company that has a very, very small TAM, regardless of whether it's a dominant player in that industry, if this TAM is really low, if it's very small, then the opportunity is going to be very small. So for Snowflake, looks like there is a lot of potential, and like I said, data is the future, right? Companies with the most data and that can analyze it have a lot of competitive edge over companies that don't. Tesla, in my opinion, at least, when the electric vehicle sector, more specifically in autonomous driving, will have a significant lead over companies like Ford or GM that have not really collected all those miles driven on their equipment, right? So Tesla, the reason why it's considered to be a technologically advanced company is because it's literally a supercomputer on wheels, right? It's collecting data, all those different things that they can then use to analyze it and, of course, make sense of it and create projects that can add more value. So That's what Snowflake does, and the market opportunity is tremendous. During the IPO, it was considered at $10 billion, but since then, it's now expected at $90 billion, and it's expected to grow to almost $300 billion in the next, 10 to 15 years. Now, expanding market share, during the Investors Day event, Snowflake announced that they are guiding for a revenue of $10 billion by 2029. We'll go over some of the expectations. We'll go over some of the guidance from the company that they have given us for fiscal 24. But this implies Snowflake expects to take a significant part of the market share. And Snowflake's market share sits at just around 18.5% right now. But they do have a lot of competitors. So big tech obviously is a big competitor for Snowflake, right? Because they're not going to, Amazon and Microsoft and Google and Meta and all these companies are not going to, pull back from the fight because of such a lucrative opportunity in this sector. There's definitely going to be a lot of participants, and there already are. So there are companies like SQL, right? MongoDB. We got Oracle Database. We got Teradata, Amazon Redshift, part of Amazon Web Services. We got SAP, Google BigQuery, and DB2. Like a lot of these are already competitors in this space for Snowflake. But of course, Snowflake does have a little bit of a unique product. And they do have a moat that kind of separates them from these competitors. So every company has obviously something different and unique to offer to their clients. So that's where Snowflake sits. Now, going over to the numbers, right? Quantitative analysis aspect of Snowflake, we have seen very, very rapid growth in revenues and customers. Now, on the top line basis, it's performed really well, but that's where the problem begins. It's when you go down the income statement, when it comes to expenses, profitability, and of course, margins on the bottom line. That's where things get really interesting. Not terrible per se, but interesting to a point where we're not profitable yet, but it has the potential to become profitable, but it's also trading at a very high multiple, even though the balance sheet's phenomenal, but the share dilution is really high. So we're going to talk about all those things and what the pros and cons are for Snowflake and where the fair value sits and where I would personally be interested in this stock. So 37% growth in revenue, 142% net revenue retention, and over 402 clients or customers really that are paying them over $1 million in product revenue, right? That's a pretty significant scale for the company. That's $402 million right off the bat that's coming from customers. Of course, 1 million plus could mean 2 million, 3 million, 5 million, whatever that number is, but over 400 customers are paying them over $1 million. 78% non-GAAP gross margins. You would expect nothing less from a software and a data provider cloud service company. 78%, pretty good margins. And this right here is the remaining performance obligations. So these are revenue that's not been realized yet, but will be in future months. So like they mentioned here, expected to recognize as a revenue in the next 12 months. So 57% of that RPO of $3.5 billion. So half of that will be recognized. A little bit over half of that will be recognized as actual revenue over the next 12 months as Snowflake provides that service, right? So this is remaining performance obligations and the revenue will be recognized. Gross margins have been growing from 74, 75 to now 78% on a non-GAAP basis. This right here is the geographic breakdown of the revenue, and 79%, obviously over almost 80% of the revenue coming from Americas. So US, we got, Mexico, and of course, Canada. And then the other one's going to be from Europe, Middle East, and Africa, 16%, and Asia Pacific accounts for 5%. So there is opportunity globally for the company to grow into, but again, majority of that revenue coming from North America. Now going over to strong combination of scale and growth here. So again, you can see the annual revenue growing very nicely on a year-over-year basis and even sequentially, right? Quarter over quarter, we've seen very nice growth, 36% year-over-year growth, but even on a quarter over quarter basis, it has been doing really well. As of second quarter fiscal year 24, just under $700 million in revenue. And for full fiscal year 23, they did just over $2 billion in revenue as well. And this right here is going to be total customers at over 8,500. And among those 8,500, 639 kind of sit on the global 2,000 customer list on Forbes. So again, we're working with very, very large companies and organizations and adding quality customers. Again, 402 customers paying over $1 million in product revenue. That's up 62% on a year-over-year basis from 248. So these are large enterprise customers that are coming on board with Snowflake. Now, this is their guidance for fiscal year 24. They're expecting $2.6 billion of revenue on the top line on a product basis, and year-over-year product revenue growth at 34%. Now, this number, you can see that it's been coming down, right? It's gone from 120% to 106 to 70 to now 34. And that's what happens when revenues grow, right? That's what happens when numbers start to become bigger and bigger and bigger. So they've gone from like $500 million to 2.6 billion. So that's a 5 times increase in revenue over the last 3 years, and the growth rate moving forward is only going to slow down. You're not going to see 70, 80, 100% growth anymore. You're going to have to settle for 20 to 30% more normalized rates as numbers start to get bigger. Non-GAAP gross margins have expanded to over 76%, so that's really good. Operating margins on a non-GAAP basis sitting at 5%. So once you kind of add back some of these non-cash expenses, 5% is going to be that operating margin, and non-GAAP adjusted free cash flow at around 26% for the company, which again is on a non-GAAP basis, right? It's not on a GAAP basis. So this right here are the fundamentals. So financials, like I said already in the previous slide, revenues have done really well, growing from $96 million in 2019 actually to over 2.4 on a trailing basis. They're guiding for 2.6 billion this year in fiscal year 24, so that's really good. $45 million in gross profit to $1.6 billion. So very, very nice, consistent growth. And you can see it's gone parabolic, right? That's a very phenomenal growth here, both on the revenue side and on the gross profit side. But what has also gone up in the same sort of pattern is expenses. So this right here, SG&A, this right here, R&D, research and development. Again, you can see a very similar pattern of growth. R&D has grown a little bit more parabolically than SG&A, that's selling general administrative expenses. And as a result, operating expenses have also gone up from 230 million to well over 2.6 billion dollars. So they're obviously spending more money than they are bringing in. So their operating income is negative. In other words, it's an operating loss of almost $1 billion for the company. So that's where, things get interesting, is that, okay, revenue is growing, customers are growing, but there's no operating leverage, at least not yet, because the company is having to spend a lot of money on SG&A, on employees, on marketing, on selling and general administrative expenses, including R&D, in order to make that happen. And as a result, operating expenses are really, really high. This right here is going to be the bottom line. So since operating losses are being generated, of course, net losses are part of the equation. So we are working with about $860 million in operating net losses here. And of course, EPS is also negative. Diluted earnings per share, negative 467, and it's gone down to about 267. So it has narrowed a little bit, but it's still negative. And of course, diluted shares outstanding have gone up like crazy. So it's gone from 38.2 million to over 323 million shares outstanding. So about an 8x, 7 to 8x increase in the last 5 years. And EBITDA also is negative, and of course, expanding on the other side from negative 184 million to negative 917 million dollars for the company. So there are a lot of red flags, including, of course, we've got the diluted EPS increasing significantly. We got negative EBITDAs. We got net losses every single year. But that usually what happens for a startup growth company, right? You don't expect them to be profitable from year one. But this is, or has been, the trajectory for Snowflake over the last 4 to 5 years. Now, going over to some of the other things. So free cash flow, for example, is actually still positive and still moving in the right direction. So that's good. It's gone from about 161 million to about almost $900 million for the company. So that's good. It's been moving in the right direction. CapEx has also been sizable, not really that much, but it's only $27 million, which again, compared to the revenue, it's really, really low, right? I mean, $2.6 billion revenue, $27 million in capital expenditures. It's really low, right? And of course, for a software company, you don't expect anything else. This right here is the balance sheet. Now, this is perhaps one of the best things about Snowflake, is that they've got plenty of cash. And thanks to all the share dilution, am I right? This right here, $3.7 billion of cash on the balance sheet with less than $300 million of total debt. So net debt's going to be $4.56 billion. In fact, if you come over to Snowflake's actual total liabilities, that's what I'm interested in, is statements, balance sheet. If you come over to total liabilities are sitting at around $2.2 billion. That's actually really, really low. In other words, they've got plenty of cash. If you come over to current assets, they've got $3.75 billion worth of cash, more cash than all liabilities included. So balance sheet is absolutely impeccable because, like I said, they've got more cash than all liabilities combined. Current ratio and quick ratio is phenomenal at over 2, and debt to free cash flow is also under 3. So it's one of the best balance sheets out there. Bankruptcy risk is little to none for Snowflake. Now, this right here is going to be the earnings expectations for Snowflake, right? So they are expected to go from about 69 cents per share, kind of like that magical number, 176% growth expected this year, all the way to as much as $19 per share by the year 2032. And that is going to be a growth rate of about 50%, a little bit over 50% compounded annually over the next 9 to 10 years. That is a very, very strong growth rate. I don't have to mention it, but it's a very strong growth rate. This right here is going to be the revenue, expected to go from $2.75 billion to over $18 billion by 2033, actually. And that's going to be a growth rate of about 20%, a little bit over 20%, because some years they're doing over 30%. Some years they're doing 28, 26. Some years they're doing 12, 5, and 12. So it's going to be roughly around 20, mid-20s in terms of that growth rate. Now, going over to valuation, things get interesting here as well because valuation's very, very, very high. We're looking at a non-GAAP forward basis, 216 times price earnings multiple because the stock price is about $142. Price to sales at around 17 to 19 times, so very, very high price to sales multiple. And price to cash flow also incredibly high at over 72 to 93 for the company. Price to book, even price to book is sitting at over 9 for the company. So very expensive stock at the moment, even at this prices. And, it's actually down from its all-time highs significantly, right? So it's down from $407, about 63%. Even after that, it is a very expensive stock at almost $50 billion market cap. We analyzed this when it actually did IPO. We talked about how it's very overvalued, even at that time. Of course, now, it still is. 66% gross margins. Again, everything else is negative, as we've already discussed, because it's not a profitable company. And this right here are going to be some of those expectations. So EPS, like I said, expected to grow at over 50% in terms of that growth rate. Free cash flows have grown by about 135% in the last couple of years, and shares outstanding have gone up by 53%. But what I'm going to do is I'm going to actually take into account the shares outstanding from 2020. When they were at 300 million. The reason for that is because we're starting off with a very small base, and that doesn't do justice to Snowflake. I mean, 53% I know is really high since 2018, but as numbers get bigger, the share dilution is going to decrease significantly. So we're going to plug in 300 million here, and you'll notice that since 2020, actually, it's only been 2.5%. So that's far better than the 53% since 2018. So you can see the numbers, again, as they have gotten bigger, 300 to 318 to 323. So they're slowing down on that share dilution. It's still a problem, but it's not as big as it seems if you were to take 38.2 million. Hope you understand that. So what we're going to do is we're going to not go with 50% growth rate in net income. I'm going to go with a modest 40%. Even 40% is really high in my personal opinion, but we're going to go with 40%. The price earnings multiple, I'm going to bring it down from 200, not at 100, not at 50. We're going to sit it at around 30. Actually, you know what? We can even go as high as 40 because that's going to keep the PEG ratio intact at 1, very similar to the growth rate. Free cash flow multiple, I'm going to go with a little bit lower number at around 30%. Free cash flow multiple, right now it's trading at 70 to 90 times. I'm going to go with lower at 30 times free cash flow multiple. Margin of safety, 10%. Share dilution of about 5%. I'm going to go higher than the 2.5% that we have for the last 3 years, and 12% discount rate. And then we're going to go 50-50 in terms of EPS versus the free cash flow. And we get down to a fair value of about $91 per share, $91.50. And of course, the market price right now is sitting at just under $150 per share. Now, these numbers, like I said, are optimistic. Even for me, these are very generous numbers for Snowflake's growth in earnings and free cash flow multiples and everything else. But it's a growing market. Like I said, data is the future, and this is a growing TAM, and this is a growing company. So you've got a growing company in a growing TAM. I guess 40% is reasonable, right? Some people would argue that it's low. Some people would argue it's high. You decide. You let me know in the comment section down below, but I think it's a reasonable growth expectations. Ideally, I would like to go even lower to 30, and that's going to put us down to $77. Like that's where I would be. But I understand how some people could see that, okay, this is a very, very phenomenal business, growing customers, growing revenue, increasing total addressable market, increasing market share. So 40% would still put us at $91.50, right? And this right now trading at $149. And this is the technical analysis. So of course, we've just consolidated sideways. This is a double top resistance for Snowflake at $390, which obviously where it was when it IPO'd, it kind of rallied all the way up to that level, then got rejected once again. And since then, we've just been selling off. And now, looks like it's been trading sideways. So, we've got a lot of sideways consolidation here within this pattern. It's a symmetrical triangle, which is kind of hard to judge exactly where it's going to break out of. But support level is going to stay put at about $109 per share. Now, this is a company where I could see myself, like even at $100, like this right here as a support, as a technical support. I could see myself starting a very, very small position, getting a little skin in the game. Because, again, it is a speculative company, but it's on the verge of profitability, at least on a non-GAAP basis. But losses have also been mounting up every single quarter. But it's got a great balance sheet. It's got a lot of potential, right? Share dilution is an issue. Profitability is an issue. Those are some of the red flags to watch out for. But like I said, it is one of those companies that either can be something huge or can be nothing, right? So it's like a high risk, high reward sort of situation. That's why you want to build that margin of safety as much as possible so you're not risking a lot. So Snowflake is one of those companies where at low 100s, I could see myself maybe starting a little bit of a position, get a little skin in the game because bankruptcy risk is really low. And, profitability potential can be high in this market if they can execute well. So let me know your thoughts down in the comment section below. Right now, it is not a stock that I'm considering. It's a hard pass simply because of the valuation. Multiples are way too high right now. But of course, at lower levels, low 100s, I could see myself getting a starter position. That's going to be about a 25, 26% drop. And then in the 80s and 90s, where I could see myself actually being a little bit more aggressive and doing more research into the company and how they kind of separate themselves from the competitors as well. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Let me know your thoughts down in the comment section below with Snowflake. Are you buying, selling, holding? What are your thoughts on this company? As always, happy investing. I'll see you all in the next video.